Hello and welcome back to another Wall Street Petting Zoo. This is our This Week at the Zoo segment in which we discuss the market news for the week and talk about the stocks we're watching and issue some new stock picks for the coming week. This week, Robert, I want to start off the episode with a little education piece. We haven't done one of these for a while. I want to talk about the January effect. January effect is something that happens. It's actually starts in mid-December and can go through the end of February. So January effect is a little bit of a misnomer. But the basic idea is, number one, this is a period when small caps tend to outperform large caps. And so far, we have seen that in late December, small caps outperformed large caps, which was new, actually. Small caps have been underperforming large caps for the last 18 months or so. And so this is a new little rally in small cap stocks. And also the other thing that happens in late December, early January is that the small cap stocks that are near their 52-week lows tend to greatly outperform the S&P 500 during this period. So in last year, I believe the outperformance of small cap stocks that were near their 52-week lows was something on the order of like 30%. It's not always that good, but it does tend to be the case that those bargain stocks that are trading near their 52-week lows, investors have been selling those off at the end of the year in order to collect their loss for tax purposes. And then other investors jump on those stocks and see that as a buying opportunity in those stocks, and they tend to outperform during this period. So this is not a bad time. If you want to pick up a small cap fund like IWM, this would not be a bad time to do that. Although, of course, keep in mind that it is near the top of its RSI range, which is something that we haven't done an episode on yet, but I'm going to have to do an educational episode on that. But basically, you might want to wait for a little pullback in that fund before picking it up. But definitely a good time of year for small caps.
Well, most definitely.
All right, let's get into the news. Why don't you kick us off?
All right, Chris. So on Monday, we had stock indexes fall as investors sold off some of their positions for tax purposes, as you just mentioned. But usually this pullback happens on the last day of the year, but this year it seems to have come a day earlier as investors anticipated the end-of-year sell-off. And then on Tuesday, which was New Year's Eve, the market opened lower but climbed to close the day slightly higher as investors took off lower prices to enter the market. There was also some optimism around trade talks Tuesday as Trump administration officials announced that a Phase 1 trade deal will be signed January 15th. Trump's trade advisor, Peter Navarro, claimed the deal has quote-unquote great stuff in it and predicted that the Dow will hit 32,000 this year. And I believe there was also a report that the trade delegate from China was actually on his way to Washington to sign the deal.
Yeah, some optimism there, some reasons for optimism. Certainly, I think when the news of actually the trade deal finally being signed breaks on January 15th, that should probably move the market. Wednesday, markets were closed on New Year's Day for the holiday. And then Thursday, we kicked off the year with a big rally. Thursday, the market surged higher as analysts. Well, basically, there's this polling that an analyst firm does where they talk to all the other analysts and get their sort of earnings forecast for the year. Then they release all of that data on the first day of the year. And all of that data suggested that analysts have been revising their earnings expectations upward for the year. So we had a dramatically higher earnings forecast on a whole basket of companies, especially mining companies, energy companies, Chinese tech stocks, aerospace stocks, airline stocks, and rideshare stocks, meaning Uber and Lyft. Some of the biggest lifts of earning forecasts came in, these are more than 50% increases over the previous forecast, came in Chinese search giant Baidu, which, as you know, Robert, I have been watching pretty closely, aerospace giant Boeing, which is one that we've mentioned a couple times on the podcast, and the ride-sharing company Uber. All three of those companies got big boosts in their earnings forecast for the coming year, over 50% higher than the previous forecast.
Yeah, even the semiconductor industry rallied as well. I mean, AMD, they jumped about 8% on the first day of the year, which was really good because Intel also followed suit. I think they went up like 5%. So even the semiconductor sector was ended the day pretty high.
That's right. And AMD was one of the companies that got a big boost in its earnings forecast. They're based on the previous forecast, they had been, I thought, overvalued. But based on the new forecast, actually, their price looks quite reasonable. Whereas Intel, on the other hand, did not get any boost to their earnings forecast that I saw. So Intel got a bit of a sympathy rally with AMD, but it looks to me like Intel's gains on Thursday were not warranted, whereas AMD's gains were warranted, and I expect the rally on AMD probably will continue for a little while.
Yeah, and then on Friday, the market opened way lower on news that the U.S. had killed an Iranian general in Iraq. Crude oil prices rose, and the major indexes lost most of all the gains from a stellar first day of the year. One industry hit by the crude oil prices rising was airlines, like United, American, Southwest, and Delta, all trading lower that day. And so we're kind of going out of the trade war, but now into an actual war, and that would make you think that the stock market would become more volatile. But according to a 2013 study by the Armbruster Capital Management in Rochester, they reported that the stock market's average volatility was significantly lower during 4 major wars of the last century, which was like World War II, the Korean War, Vietnam War, and the Gulf War. With the war in Afghanistan starting after the September 11th attacks, the Dow gained nearly 12% over the 6 months that followed the start of the war. It is speculated that our nation becomes more cohesive during periods of hostility. However, it could be said that we are divided now more than ever, and this trend could not be applicable to today's society.
Yeah, I don't know about you, Robert, but I took advantage of the pullback to buy the dip because I do expect the market to move higher on news of all of those earning upgrades that we received on Thursday, and I'm not convinced that this Iran thing is going to be necessarily a bad thing for the stock market. For many years now, Iran has been supporting Shia rebels in Saudi Arabia. That's some of the background to this situation. And the U.S. has been supporting the Saudis. So there's been a bit of a proxy war happening in Saudi Arabia between the U.S. and Iran. So this thing that's happening between the U.S. and Iran now has a long history. Iran also supports Shiite militias in Iraq that are working to destabilize the U.S.-backed regime there. And for a while, tensions were cooling under Barack Obama. We had a nuclear deal that we signed. But then Trump came into office with basically the agenda of rolling back every policy that Obama ever passed and immediately pulled the U.S. out of the nuclear deal as part of that effort to roll back all of Obama's accomplishments. And ever since then, we have had escalating tensions with Iran, U.S. and Iran waging a kind of guerrilla war against each other, shooting down each other's drones. Back in June, Iran attacked a couple of oil tankers. In September, they bombed a Saudi oil field. Most recently, last week, Iranian-backed militias killed an American mercenary in Iraq. That was on last Friday. And the U.S. retaliated for that by bombing 5 of the militia's bases and killing 25 people. And then on New Year's Eve, this last week, Iranian-backed militias attacked the U.S. embassy in Iraq. And Trump tweeted a threat of retaliation against Iran on Twitter, and then Khamenei, the supreme leader of Iran, replied on Twitter, number one, the U.S. has been committing acts of aggression in the Middle East for years, and we have legitimate grievances, and number two, you can't do anything. That was his quote, and possibly out of a desire to prove him wrong, Trump authorized the killing of this Iranian general who had orchestrated the embassy attack, and he also signed a bill authorizing 3,000 troops to go to Iraq. And the Iranians have vowed revenge for the general's assassination. So this may not be the end of this situation. It sounds like there's going to be some continued escalation. But so far, it is going to be probably a fairly limited conflict. I mean, 3,000 troops is not a very big number. That's not on the order of what we've sent to Iraq and Afghanistan before. So this is still a fairly small scale conflict, but it has the potential maybe to escalate a little bit. As we discussed, the stock market did fall on the news, although energy stocks, mining stocks, and aerospace and defense stocks moved quite a bit higher on Friday. China stocks also took a hit on the news as investors see China potentially taking the side of Iran and Russia against the United States. There's also in China a virus outbreak happening right now, which has been suggested may be the return of SARS. And so that may also have hit Chinese markets on Friday. China, with regard to the Iran situation, did issue a stern warning to the U.S. not to escalate the conflict. So over the weekend here, we've got some threat of possible conflict in Iran, a very likely conflict in Iran. But we also have some good earnings news for the week, Robert. So what do you think is going to happen on the open on Monday? Got any predictions?
I honestly think that we might see a small pullback, as in we're going to pull back further than what happened on Friday. But we'll see. I mean, it's going to be the first trade week of the year that investors are all back in. All eyes are going to be looking at Wall Street versus last week where not everyone was back because of everyone coming back from vacation. So I'm actually concerned that the stocks actually will see a pullback, which I mean might be a good thing because then there's buy-in opportunities. Because I mean it doesn't devalue some of the stocks that I've been looking at. So the two stocks that I was looking at during this time was Activision Blizzard, Bank of America, and I was also looking at Ford. So Activision Blizzard was about to hit 60 Thursday, and then all this bad news came out and it dipped back lower. Same with Bank of America and Ford. They kind of just pulled back and lost the small rally that they were having on Thursday. So hopefully, it pulls back again on Monday or Monday or Tuesday, and then I'll look for more buying in opportunity.
I believe Activision Blizzard did get a little boost to its earnings forecast. And I also looked at Ford, and that also got a boost to its earnings forecast. I didn't look at Bank of America, so I can't give you any information about that one, but your two stocks there I think should do well this month.
Yeah, because Activision Blizzard they upgraded like some analysts upgraded their rating on the stock. So, but the reason why they upgraded it was because they said it's like, oh, there's new consoles coming out late 2020, and I'm like. When I read that, it kind of scratched my head because Activision Blizzard doesn't really play in the console space, but Electronic Arts does, and they actually, two of their like main cash cows, FIFA and Madden, are very console dependent. So, I'm also going to be looking at Electronic Arts now that some analysts are kind of confusingly announcing that we should be looking at this gaming industry with new consoles coming out when Activision Blizzard only really plays in the PC space and not in the console space.
Yeah, that's funny. That's one of those situations where it's like analysts have their sort of fingers in too many pots and they don't really know what they're talking about with some of the some of the stocks they're looking at.
Yeah.
I actually expect the market will move higher on Monday, and partly that's based on the post-market movement on Friday. I saw it looked mostly like things were trading a little bit higher on Friday afternoon, and especially in energy stocks. I saw a number of energy stocks, and that's because with the threat of Iran conflict and disruption of oil supplies in the Middle East, probably oil prices are going to continue moving higher, or at the very least stay at their same levels. And that's great news for energy stocks because oil is trading quite a bit higher now than it has been for the last 6 months or so. Oil stocks right now are sort of bargain priced, and so it's probably a good time for those stocks. So I think especially oil and energy will do well on Monday, but I think probably the whole market is going to rally on Monday based on what I was seeing after market on Friday. But it's never a sure thing, and those aftermarket prices often can totally reverse themselves. So we'll see. In our last episode together, I called out, that was 2 weeks ago, I called out Baidu, Zoomies, and Snap as my main three ones that I was watching, and all three were big winners. Baidu and Zoomies are both up over 5% in the last 2 weeks, and Snap gained almost 8% since that episode aired. So I'm really happy with the results of those trades. I've sold off my Snap and Zoomies and taken profit on those, but I'm still holding Baidu going into next week. And overall, I am up over 16% on Baidu since I opened that trade. So that's been a really good one for me.
I've always wanted to make this joke. Is Baidu a Baidu?
I do think so, actually. That takes us to the stocks we're watching this week. And China stocks are one of the big sectors that I'm watching, especially Baidu, JD.com, and Kudian. I'm still very excited about these stocks, even after big upgrades, even after big rallies, because they got big upgrades to their earnings forecast on Thursday. There are definitely some risks here. If China gets involved in the conflict with Iran, that obviously could get in the way of resolving the trade war. So that's a risk. Also, the market generally assumes that a China trade deal will be good for Baidu and these big tech companies, but I think it poses some risk. Because keep in mind, one of the major issues in the trade negotiations is Chinese companies stealing American companies' technology. And so if we got some kind of resolution on that issue that led Chinese regulators to take that issue more seriously, it might be bad for Chinese tech firms. I don't know how much any of these companies have exposure to having stolen technology. But if Chinese regulators crack down on that, it might be really bad for these companies. Last week, a Chinese court fined Baidu 1 million yuans for spreading copyrighted material through its search engine. 1 million yuans means almost nothing to a company as big as Baidu. That's like $100,000. And the plaintiff in the case had been seeking 29 million yuan. So this was basically a slap on the wrist in the scope of this lawsuit. But it was the biggest fine China has ever imposed for a copyright violation. And it signals that they're potentially getting more serious about this. And they could get a lot more serious about it as a result of trade negotiations. The Chinese government has said that intellectual property right laws might not get fully implemented until 2025. So this may be more a long-term risk and hopefully won't affect these companies' bottom line in 2020. Also, Chinese regulators are also looking right now to implement a new antitrust law targeting big internet companies, which should be bad news for the likes of Baidu, which is China's Google, and Alibaba, which is Chinese Amazon, and JD.com, which also has a bit of an Amazon feel to it. The law increases the maximum fine for unfair competition by a factor of 10, and it sets up a stronger system for enforcement. So this may signal, legal costs for these companies in the future and potentially some restructuring costs. So overall, I am bullish on China stocks, and I think that they have a lot of upside moving forward. I also am watching oil stocks, oil and energy stocks, as I mentioned. The danger with the oil sector is that even though oil prices are going up, many of the big oil companies have operations in the Middle East that could get disrupted by a conflict in the Middle East. And so some of the big oil companies actually fell on Friday on news of a potential Iran conflict. So I am mostly watching the domestic oil producers, the shale oil companies and the offshore companies that are here in the United States. And I am especially watching Callon Petroleum, ticker CPE, which specializes in oil and natural gas drilling in West Texas. I think it's at a really attractive valuation right now. And it's had good execution in terms of growing earnings, whereas a lot of oil companies are struggling on that front. So this, to me, looks like a pretty good buy right now. And also the XOP Oil and Gas Exploration Fund is another option for a more diversified play. This fund, if you look at the fundamentals of this fund, I mean, it's trading at a PE of 4.5, which is really low PE. Like, that's just a great bargain. And the price to book value is like on the order of 0.5, which means that they have basically you're buying their assets at a 50% discount. The price you pay for the stock is actually half of the value of the assets that you're buying. So just in terms of the if these companies were to close up shop and sell off all their assets and just pay the proceeds as a dividend to investors, you basically would double your money on this stock or on this fund. So great bargain there. And as long as oil prices continue to rise, I think we could see a huge rally this year in the oil and gas exploration sector. Another one that I am holding is the XAR Aerospace and Defense Fund. Not only did we get big increases of earnings forecasts in the aerospace sector, including uh, Boeing, Lockheed Martin, and Raytheon, which are three of the big players in that space, but we also, of course, have this conflict between the US and Iran, and we have Trump launching a space force. I think all of these signs in the aerospace sector are good for these companies, and probably this will get a pretty significant rally early in the year on all of this news.
Yeah, and the stocks I'll be looking at this week, other than Bank of America and Ford, I'll also be looking at Aurora Cannabis. I know we touched on this a couple weeks ago, and the stock is continuing to tumble. I think right now it's right at the $2 mark, and it's just been tumbling and tumbling. But I believe it will start mounting a comeback. I'm just waiting to see where the floor is developed before buying into it. And with close to out of every 4 states legalizing recreational marijuana, and 5 more states voting for it this year, even though the stock company is based in Canada, they are international. They are in international markets, and if the U.S. ever decriminalized it federally, they are just a small step away from the U.S. market. And so other stocks I'll be watching just in case of a pullback early next week is Zoom, Netflix, Disney, and AMD. And I don't know if you've been paying attention to Tesla, but they have rallied stupendously in the last month.
I have been watching it ever since you pointed out the big earnings beat where they basically turned their first profit.
Yeah.
I have been watching Tesla. I haven't bought it though. But certainly the market has reacted very well to that news, and Tesla has just surged higher.
Yeah, in the last 30 days, it's gone up 110 points, and it was at 330 at the beginning of December, and it actually traded higher on Friday. It recovered most of the dip from the early news Friday morning, and it ended at 443. So it's amazing how fast that stock just rallied.
Yeah, that's pretty wild for sure. And that's a 33% approximately gain. That's pretty great.
Yeah.
Regarding Aurora Cannabis, the options market would tend to agree with you that this stock is near a bottom and that it's going to move higher. I would just warn that there is a cash flow risk with this stock. They are going to run out of cash this year, and they will have to do some additional fundraising, which they probably will do partly through borrowing money. They already have a fundraising deal that lets them borrow more money, so they aren't necessarily going to be adding new fundraising deals, but they certainly will exercise their existing funding deal to its limit, and then possibly they will also be issuing new shares at some point this year. So those are not immediate risks. Probably in the short term, I think Aurora Cannabis is going to do really well. It's one of those stocks that is trading near its 52-week low, and so it has the potential to really benefit from the January effect that I discussed at the beginning of the podcast. But this is in the longer term, if you're holding this for the year, this stock definitely poses some risks because typically adding new debt and issuing new shares are both really bad for the share price. And Aurora Cannabis is still a fairly long way from profitability. It's not going to achieve it this year probably, which means that there will be additional fundraising problems next year. So maybe not a long-term play, but for short-term, more speculative traders, this is one that may benefit this month.
Yeah, they've actually been able to pivot very well because they were actually building a not a dispensary, but a growing plant in Denmark in the middle of last year, and they actually canceled it because their stock prices were continuing to go down. So they actually stopped that, and they saved about, I think it was $160 million by not finishing that project.
Yeah, but that does illustrate how, even though their revenue has been growing really fast, they do have cash flow problems. And that decision is not going to completely solve those cash flow problems. Even at, the numbers that I'm talking about where they're going to have to raise more funds are even after that decision not to build a new plant. And that decision, unfortunately, is going to be a drag on their revenue growth. They've been growing revenue really fast for the last several years, but they're not going to be able to keep up that pace of revenue growth because they're not opening that new plant. So I'd just be really careful with Aurora Cannabis as a long-term play. It's a short-term swing trade. One that I really do like in the weed space is Grow Generation, which is a small cap weed stock, and it's one of the few that is actually profitable and growing its profits. They have kept their expansion more limited, but they're just really executing really well, and so. I definitely have some shares of Grow Generation, and it's a bit more volatile because it's a small cap stock. But I think that, assuming that it continues moving forward to execute as well as it has been doing so far, I think that that's a really strong play in the weed space. All right. Well, guys, if you enjoyed this podcast, please give us a like, share, or comment on the YouTube video. Underneath the YouTube video, you can find links to our social media pages, our Facebook and Twitter. And you can also find a link to open an account on Webull. If you deposit $100 in a Webull account, you get a free stock. We get a free stock. Everybody wins. It helps support the podcast. And we can bring you more of this great content. Keep an eye out on our YouTube channel for educational videos. I plan to post a few of those in January. So if you're listening on Podbean, make sure to check out our YouTube page and look at the playlist for education videos, because those don't get onto Podbean because they're all in video format. Thanks so much for listening to the podcast. Share it with your friends, and we'll see you back at the zoo next week.